Here we go. It's 10 minutes to the closing bell. The date, 8/13/2012. Dog days of August. The Dow was down earlier considerably, testing the daily 10-day simple moving average. It's bounced back into positive territory. NASDAQ 100, on the other hand, as we can see here clearly, that the NASDAQ 100, which is 100 stocks that come from the NASDAQ comp, they too are hitting a 5-day topping pattern daily. They have not broke out of this daily range. Just to give you an update here, MMTs. So basically, we're right here at the short-term wall of resistance, and this is today's trading, of course. NASDAQ Composite, we have major tops being put in here. You can see that the NASDAQ Composite ran into a little wall of resistance, but once again, Apple and Google are leading the way. So what I will say is that in the dog days of August, as a market recap, you have the same 5-day topping pattern there. In the S&P 500, what we have here, MMTs, is we have that wall of resistance that we talk about over the weekend and other prior analysis, is that right now there isn't any earnings to drive it higher, and it's going to take the small cap to help get this higher, but it too has run into multi-year challenging highs, and for 5 days we have not broke the resistance on any of these indexes. However, the volume is lighter, and over the last, let's say, 3 to 5 year period, volume is about 70% lower on all of these indexes. Why is that? High frequency beat the poor investor and trader out of the market. They were manipulated. StockMarketFunding.com addresses high frequency trading. There are high frequency trading courses that you can participate in. We can teach you that the older trading days in the early 2000s and the 90s are gone. They are different. And the reason why the volume is a lot lower on all of these key indexes today is because those participants have been blown out of the market. And it's only because no one's going to train you how they manipulated the market with new technologies and high computing computers with buy and sell scripts. We won't go into that. We're doing a market recap. We're just letting you know why. We just don't have that volume in the dog days to take out this 5-day consolidation yet at resistance. That goes for the NASDAQ Composite. Same thing. Right here, I already showed it. So basically, something's going to happen. Either we're going to break out of these ranges and continue to go higher, grind higher, because this is very tight on a daily level. Once again, on the NASDAQ Composite, they're all the same right here. Here, I'll blow it up one more time. So we're going to be looking at call and put strategies, because what you want to see is a higher breakout volume. It's not there. Another thing that's not there for us, MMTs, is this right here. Same thing. Dow Jones, see it? 5 days. We're not getting that high volume breakout in the dog days of August, but rather we're consolidating it. And one thing is going to happen. Either we're going to break up out of the range or we're going to sell back down. You will not have in between. It's either you break higher or you break lower. And coming down and testing 13,000 at the 20-day moving average would be good. We've had all of the speeches from who? Mr. Romney and the new gentleman that's being appointed as vice president there. That did not help the market. They didn't go higher. And the only reason why that one's positive is because of big bellwethers like the Apples are coming up to all-time highs. Groupon reports earnings after the close, MMTs. It's heavily shorted. They've had problems quarter after quarter. The shorts get squeezed. This thing can pop a quick $1.50 and we would sell into it. Once again, I'm going to conclude, though, the Dow Jones and the market recap just to let MMTs know where we're at. And we're not breaking out on volume. We're not breaking down either, but something will happen very soon. And the fear factor, when we take a look at where we were here today on the fear factor on the VIX, this is a gauge of fear. Look at this on a daily level, and I showed this over the weekend in the training sessions. And the thing about it is, once again, when you get this low, whether it was high frequency computed generated or real humans, it doesn't matter. There is going to be a turn. And the thing about it is, like we've always done, if you go back and look at all of our indexes when we warned people, for the people like investors that were still around, hey, it's time to sell. This is very complacent. There's no fear. And you can stay down here for a period of time. And what would that be? Oh, a couple of weeks. But when these get too low, that's when market corrections happen. As I've been teaching a lot of new people, is when those break higher, markets are selling off. But when they go lower like this, markets are breaking out. This is the calendar 2012 period right here. So when we were short in the market, this thing was breaking higher, and it broke all the way up here to these highs in the fear indicator, as it did. Then it's come all the way back down here to the very same complacency levels that it was when we were telling people it's time to short the calendar 2012 highs. And we have all of those indexes and those shorts live when we did them, and the analysis that goes with them before the fact, not after the fact. Here is that lower support level. We are back at this level. We are going to tell people they should be very cautionary. If you are an investor, there's a time to take profits. Doesn't mean you have to sell everything. But we always tell people, just of our good nature, it's time to take some money off the table before you start building a base down here. We don't know exactly, but this fear indicator is right back here. And if we go down a little bit lower, markets can go higher on lower on balance volume, which is quite different today than any time in our history. People just don't know how to figure out the volume. We quit doing that, heck, over a couple years ago. But my thought, MMT, is like we always do and always have, is that we're getting to that place where that high frequency tape could make a directional change. Okay? And that would be what? Natural high frequency program selling based on the lower VIX. I'm recapping today's marketplace with a mild pullback on the Dow. Recovered over 50%, it looks like. NASDAQ 100 is only positive, but the pullbacks are diminished. There's no big sell programs in high frequency. But then, as I've said, on all of the indexes, there isn't any high frequency buy programs going through the broader indexes to run them through those resistance levels that I talked about herein.